Nvidia shares moved down 1% in extended trading on Tuesday after the chipmaker reported fiscal third quarter results that surpassed Wall Street's predictions. But the company called for a negative impact in the next quarter because of export restrictions affecting sales to organizations in China and other countries. We expect that our sales to these destinations will decline significantly in the fourth quarter of fiscal 2024, though we believe the decline will be more than offset by strong growth in other regions, Nvidia's finance chief, Colette Kress, said in a letter to shareholders. On a conference call with analysts, Kress said Nvidia is working with some clients in the Middle East and China to obtain U.S. government licenses for sales of high-performance products. Nvidia is trying to develop new data center products that comply with government policies and don't require licenses, but Kress said she didn't think they would be meaningful in the fiscal fourth quarter. Here's how the company did. Compared to the consensus among analysts surveyed by LSEG, formerly known as Refinitiv, Nvidia's revenue grew 206% year-over-year during the quarter ending October 29, according to a statement. Net income, at $9.24 billion, or $3.71 per share, was up from $680 million, or 27 cents per share, in the same quarter a year ago. The company's data center revenue totaled $14.51 billion, up 279% and more than the Street account consensus of $12.97 billion. Half of the data center revenue came from cloud infrastructure providers such as Amazon, and the other from consumer internet entities and large companies, Nvidia said. Healthy uptake came from clouds that specialize in renting out GPS to clients, Kress said on the call. The gaming segment contributed $2.86 billion, up 81% and higher than the $2.68 billion Street account consensus. With respect to guidance, Nvidia called for $20 billion in revenue for the fiscal fourth quarter. That implies nearly 231% revenue growth. During the quarter, Nvidia announced the GH200 GPU, which has more memory than the current H100 and an additional ARM processor on board. The H100 is expensive and in demand, Nvidia said. Australia-based Iris Energy, an owner of Bitcoin mining data centers, was buying 248 H100s for $10 million, which works out to about $40,000 each. Computing instances based on the GH GPUs are coming soon to Oracle's cloud, Kress said on the call. As recently as 2 years ago, sales of GPUs for playing video games on PCs were the largest source of Nvidia's revenue. Now the company gets most revenue from deployments inside server farms. The introduction of the ChatGPT chatbot from Microsoft-backed startup OpenAI in 2022 caused many companies to look for ways to add similar generative artificial intelligence capabilities to their software. Demand for Nvidia's GPUs strengthened as a result.